Do you currently own rental property? Do you want to become a landlord? Do you think property investing is a great money-making idea? Well, you might be right, but there's one thing that you need to truly understand before diving in to this new venture, and it's how do you insure rental property in New York State? The first question that I tend to ask my prospects or clients when they want to get into rental property is, what's your goal? What's your end goal in this? Do you want to buy 1 or 2 properties, have a little extra income? Do you want to buy 10, 20, 30 different properties and maybe turn that into your new full-time job? Because even though the insurance policies are pretty standard, how you want to insure it can vary depending on what your goal is. So let's first start by talking about what the difference between the 2 types of forms in a property form is. Check out this video we did a while back regarding what the difference between replacement cost and actual cash value. Hey everybody, Mike Crowley here from the Crowley Insurance Agency, and today I want to talk about what the difference between replacement cost and actual cash value is on a property insurance policy. Replacement cost is exactly what it sounds like. It's the cost to repair or replace your current structure in today's construction prices using materials of like kind of quality. This is not subject to depreciation, and the insurance company will pay up to the policy limit minus your deductible. Most homeowners and property policies are written on a replacement cost basis, especially if a mortgage company is involved. Replacement cost has nothing to do with the market value of the house, or how much it's worth, how much you bought it for, any of those things. It is solely on what it would cost to rebuild the total structure or replace the total structure today. Actual cash value, or other known as ACV, is replacement cost minus depreciation and deterioration. This is where it gets more into the market value or what it's worth, and different homeowners insurance carriers or property insurance carriers will allow actual cash value in certain circumstances. We tend to see it more on rental property or secondary buildings or outbuildings, not necessarily on a homeowner's policy. When you carry an actual cash value policy, you're going to get paid on an ACV limit, whether it is a total loss or it's a partial loss. And this is the biggest problem with carrying an actual cash value policy. And let me give you an example. You have a fire in your kitchen. It caused $30,000 worth of damage. Well, after you take away depreciation and deterioration in your deductible, how much of that $30,000 are you going to get towards replacing or repairing your kitchen? Well, it depends on the coverage limit you carry. It depends on a few other factors, but let's say for argument's sake, you're only going to get $15,000. So you're only going to have $15,000 now to repair that kitchen or replace that kitchen instead of the full $30,000 it's going to cost. This is going to go for any type of claim, and they're only going to pay a max of the coverage A dwelling limit, even on a total loss. Appreciate you listening to the difference between what a replacement cost and what actual cash value is. If you have any questions, feel free to reach out to us and let us know. We'll be happy to help. Now that you have a better understanding of what replacement cost and actual cash value property policies are, let me show you a video on exactly what the different types of forms in an insurance policy and what is covered under each different form and where they come into play. Take a look. Hey everybody, Mike Crowley here with the Crowley Insurance Agency, and I want to talk to you about the different types of forms built into a property policy and what each one actually covers. So let's get started. So as I mentioned, there's 3 different types of forms, all built into every type of property policy, for your primary homeowners to your rental 1 to 4 family rental property when it's on a personal lines basis. It's a basic one form, broad or a 2 form, and a special and a 3 form. And that's how it's going to be labeled throughout. Probably 99% of the different insurance carriers will be 1 form or another. It'll say basic, or it'll say a 1, broad, and a 2. You get the idea. So let's get started. A basic form, a 1 form, also sometimes known as a fire policy, because in theory
we look at it as that's the only thing it's covered for. But let me go through real quick. Fire, lightning, wind, hail, explosion, glass breakage, aircraft damage, and smoke damage are all included on this one form. It also has the ability to add vandalism and theft depending on the insurance carrier and depending on the circumstances of the property. Usually this policy is meant for the vacant and unoccupied buildings, or potentially the property you bought that you're going to remodel and fix up before you move in 6 months down the road. It could be some coverage there during that time period. The broad form definitely opens up the scope of coverages a little bit more. It includes everything that's built into the basic, including vandalism and theft automatically. It also includes the weight of ice and snow, vehicle damage, smoke damage, heating loss, water damage, freezing of pipes, falling objects, collapse, electrical damage. In upstate central New York, where we are, weight of ice and snow, freezing of pipes are two huge coverages that are needed on properties, especially obviously during the winter time. Falling objects, we have a lot of trees in some areas, and these are the coverages that are going to better broaden your policy a little bit better. This form is normally what you or we see on rental property, especially rental property written on an actual cash value basis, and sometimes even on a replacement cost basis. A lot of times on rental property we see this form. When you get into the special form, and a special form is what we probably see 99.9% of the time on a homeowner's policy. Primary homeowner's policy includes everything that we just went over on the broad form. But one of the major coverages that's not included on those, but it is on this, is the water seepage, or better known as ice backup. And this is where when you have ice built up on the edges of your roof and we start getting meltdowns and water doesn't have a place to go because there's no channels for it to go to run off, and it backs up and causes water spots or water damage into your house. Again, we see that in central New York all the time, and it's a great coverage to have. You can see here there is a few other coverages: overheated appliances, dropped objects, accidental damage, spilled chemicals. You get the idea. If you got any questions regarding what type of form you have, what type of form you should have, please let us know. We'd be happy to help.
Okay, step one is to figure out how you want to insure the property, whether at replacement cost or actual cash value. Step two is to get a little bit more detail on what policy form or property form you're going to have built in with the actual cash value or replacement cost policy. Third step is to truly understand the different underwriting guidelines that you need to know on which insurance company is going to be the best for you to insure your rental property in New York. This is where having an independent insurance agent like ourselves is going to pay a huge benefactor in this, because there's no way of you even knowing what the underwriting guidelines are. Do you want to add all 20 of your rental properties on one master policy? Do you want to insure some at replacement and some on an ACV level? Do you have some that you have mortgages on that you have to insure one way? Or do you have some that have been paid off free and clear and you're just maybe worried about getting your money back out of there? All of these things play a huge role in choosing how you insure your rental property in New York State. So please, if you have any questions regarding this, reach out to us. Let us break down your portfolio of rental property, what you want to do, how you want to insure it, and we'll advise you the best possible way to meet your insurance needs.